Vaibhav, let's start by analyzing this very disturbing piece of news which is actually coming on the screen and the market is reacting to it. You know, as a market participant, how would you read this? I mean, there was surely some build-up last couple of weeks, but it would lead to violence happening there, leading to casualties of an officer and two jawans. This is not great right now. How do you analyze this?
No, of course. I mean, the geopolitical situation or geopolitical tensions, is never good for the markets in any case. But geopolitical tension at our end, of course, some amount of worry. I hope that the situation gets diffused as quickly as possible, and I'm sure the government and the militaries and the armies are pretty much working towards that.
Right. I'm sure of that too, because two large countries cannot really get into all of this right now when the world itself is actually facing such difficult times on COVID front. There is massive hit to global economy. We cannot afford any kind of build up on military front right now at the borders. There is my colleague is also telling me that there is a press conference also scheduled by the Indian Army at 2 p.m. today, and clearly right now rupee has weakened and the markets have given up all the gains. We'll try and get some specific information also in detail and some experts on that, but the situation on the economy front too, Vaibhav, right now when the world is actually grappling with such major hit on the economy, I don't think any country can even, in the wildest of thoughts, can think of this kind of a military buildup in any side.
No, precisely the point, Ajay. I think, as you rightly mentioned, right, military, conflict is the last thing one would want to probably have at this point in time. I mean, of course, we are reeling under the whole COVID-19 situation. And not only India, I think the global markets as well, and the global economies as well. Having said that, different governments across the globe has come in and did their bit in terms of the monetary and fiscal stimuluses, and because of that, we have seen some amount of stability coming back to the markets. While the stability has come back, market is always prone to the weaker economic data, which will come out, post this quarter. Not only economic data, but also the corporate earnings are going to be pretty bad, if you look at June quarter as well. So my sense is basically you are in for volatile times. The only saving grace is basically that the lockdowns are going away globally, and there is some amount of resumption of activity, of economic activity, wherein on a month-on-month data, you might see some amount of, better news coming on there.
Right. In fact, I'm just looking at some of the articles which have come in the last couple of hours. There have been very clear commentary from senior officials on the Indian side as well on the Chinese side that the buildup which had actually happened is diffusing now. It is de-escalating. So in the process of de-escalation, violence has occurred. This is not a great news. I really hope that this issue will be contained shortly. And I just got a piece of information that India, China have disengaged now, but Galwan clearly it was a sort of an intrusion which happened over there, because of which perhaps it triggered into violence. I'm sure that at 2 p.m. when there is a press conference from the army side, we'll get to know exactly what has happened, and both the senior officials of both the countries would have swung into action to contain the situation, and I'm really hoping that this will not really escalate into anything bigger than this, but very unfortunate. An officer and two soldiers have lost their lives in this, which appears like a one-off kind of a escalation up till now, but we do not have the details as of now. But market clearly would react to it, and it is reacting to it. It's at the lowest point in the session. For a moment, before we get some experts on this matter, Vaibhav, how are you positioned in the market right now? Are you net long or short, or are you running hedged positions? because the fundamentals are not really looking that great, and liquidity from global market continues to flush around.
Absolutely, Rajay. I mean, we are in a situation where, because of the liquidity, you are seeing asset classes kind of artificially, up there in terms of the prices, whereas the underlying economic strength and corporate earnings are not going to be good at all. So we are in a situation where, on a fundamental basis, to have high conviction and probably go long, it's kind of extremely difficult. And thus, what we are doing is basically we are focusing on capital preservation. We are focusing on saying that in this high volatile environment, we are happy to earn less rather than kind of take a big directional bets. And thus we are learning. We are going on with very low net delta, which means that my positions are highly hedged. At the same time, my cash levels are pretty high as well. So all in all, what we're trying to do is the focus is on capital preservation while making whatever we can, on a consistent basis.
Right. Vaibhav, you are also from an organization which engages a lot with global investors. You yourself keep a very close eye on global macros as well. And, before this COVID issue happened, there was a very strained relationship between US and China as well, which was keeping global markets on tenterhooks. And while that has not really improved a whole lot, perhaps got faded a bit in COVID light, but it still remains. There are commentary coming in on both sides. Now China seems to be opening a fresh kind of engaging with India, which cannot be taken lightly. It's one of the largest countries in the world, among the top 5 now, big democracy. What is happening on the geopolitical front, and how will global markets and local markets read at all of this?
Of course, I mean that is concerning, no doubt about it. And earlier as well, if you see, as you rightly mentioned, that US, China, were something where we saw some trade problems. Having said that, what we also need to realize is basically having election in November in US. My sense is basically the rhetoric will probably increase then rather than decrease. So we are in some amount of volatile, kind of environment, especially concerning US and China. Of course, China, India, tension does not basically, sensibility will prevail on both the sides, and probably, things would diffuse. And my prayers to the casualties which have happened at the border at this point in time. So what I would think is basically that because global geopolitical tensions, the volatility will remain, but the only consoling factor is the liquidity, which is pretty much prevalent into the global markets, which is not depreciate in terms of values.
Right, right. We'll just get Vaibhav back in a second. Is Vaibhav with us? Look at that. Right, Reliance Industries at days low. So all these big stocks which were really in the middle of a very good momentum, like Reliance, etc., all of them have lost momentum, and right now we are at days low. How are you positioned right now in the market, Vaibhav? You must be keeping a close watch on the commentary coming out of the key managements. Also at the same time, globally, how things are shaping up. So what's your hypothesis for the market in the medium term, not immediate short term, but say a month or two?
So with respect to the medium term view, Ajay, I think basically, markets would attain stability on primarily two kind of variables. One, either you find a treatment to this disease, or you find a vaccine for this disease, so that people can come out and resume their normal lives. If that happens, then probably on a medium-term perspective, perspective, I think we should be looking up purely because the money which is lying in the global system is going to be tremendous. And if I kind of take 20 seconds of yours in the sense trying to correlate with 2008 and 2009, where because of the liquidity we saw, despite of GDP not growing, we saw markets kind of appreciating, and the P started to become expensive. This is something which may see this time around as well, where probably in a medium-term perspective, the economic growth can be at one end and probably the market performance can be the other end. There can be a disjoint between both the performance, both economic performance or market performance. So that is something which may happen probably in the medium term.